Hi, my name is Jonathan Roth, and welcome to Risk Hedge Video. I'm joined today by Jared Dillian. He's the former head of ETF trading for Lehman Brothers and currently writes The 10th Man and Street Freak for Malden Economics. Jared, thank you so much for joining me.
Thanks for having me.
Jared, Donald Trump gave his first address to a joint session of Congress last night, and the instant reaction of Americans from all the polling that's been done this morning seems like, in general, Americans liked it. He really hit pretty hard on some economic issues, didn't really give the specifics on what he wants to do. He just talked in broad strokes. And the first thing I want to talk to you about are taxes and regulation, which I think everybody across the board would say are too onerous in the U.S. right now. What do you think of Trump's take in terms of how he addressed those two issues last night?
Well, I mean, the funny thing about this speech is that the market reaction has just been truly massive. The Dow Jones is up 300 points today. And I think the market is excited that we got good Trump instead of bad Trump. And bad Trump is the Trump that's really focused on immigration, focused on this travel ban, focused on a lot of this populist stuff. And good Trump is the Trump that is not focused on these things and is hopefully focused on the economy. But still, we got really not a lot of specifics in terms of tax and regulation, and the border adjustment tax is starting to get some more opposition in Congress. I mean, the retailers are heavily opposing it. If you're Tom Cotton and you're a senator from Arkansas and Walmart is in your district, you are not going to vote. There's zero chance you're going to vote for the border adjustment tax. So I think the politics of these things are getting a little more complicated. And the thing with the border adjustment tax is that that tax is supposed to pay for all the other tax cuts, which is how this package was going to get through reconciliation, and so it cannot be filibustered. But if the border adjustment tax doesn't pass, then either they have to figure out some other stuff to cut, or this is going to be subject to a filibuster. So, the fact that the market is up massively today is we still don't have any specifics. Now, it's kind of hard to fade a market that is this strong, but at some point, we're going to get down to specifics, and it might not be that favorable for stocks.
Interesting. Okay, well, one of the big things that Trump wants to do is lower corporate tax rates. So you're saying that if he can't do his border adjustment tax, these corporate tax rates either aren't going to happen or they're not going to be nearly as huge as he was describing during the election campaign.
Yeah, a lot of the stuff that he wants to do sort of hinges on his ability to raise revenue through border adjustability, whether it's corporate taxes or marginal rates on individual tax rates, or, they talked about taxes on LLCs and S-corps. Like, all of this is one package and has to pass together.
Interesting. Okay. Why don't we move over to what's going on in the markets in general? I mean, the market's been up like crazy since he's gotten in. How long can this continue for? Anybody that would go and buy a stock today, you gotta ask yourself, to what degree you're playing Russian roulette?
Well, I don't think that we're into bubble territory yet. Now, I've been trading since 1999, so I've seen two legitimate bubbles so far. I saw the dot-com bubble and I saw the housing bubble. And we're not in bubble territory. Stocks are expensive. They're overbought. They're overvalued. But overvalued, overbought stocks can continue to go up for a really long time. They could go up 20, 30, 40%, no problem. And the interesting thing is that just in the last 24 hours, the probability of a rate hike in March has gapped out to about 80%. And now for the first time, really ever, the market is starting to believe the Fed's dot plot on the future path of Fed funds. So think about this. If I told you that suddenly the market was pricing in 3 rate hikes this year and the Dow Jones would be up 300 points in one day, you would say that's nuts. But the market doesn't even care about the rate hikes. That's how strong this bull market is.
Wow. So that was my next question, what the Fed is going to do. So do you think, is the market strong enough that they're going to raise it a half point or the full point, or are they still going to stick with this quarter point that they seem to be moving along on?
Yeah, they'll probably stick with the 25 basis points. I don't think they're going to do 50. But pretty soon, we have to start having conversations about, who's going to be on the Trump Fed. This is something I think that we're going to be hearing about in the next month or so. who's going to be the next Fed chairman after Yellen. And, I've heard names like Greg Mankiw. I've heard names like Kevin Warsh, who was on the Board of Governors before. So, we'll see. But I guarantee you, whoever ends up on it is going to be more keen to hike rates than whoever was on it before.
Become a Risk Hedge insider for free by visiting riskhedge.com. Each week, you'll receive vital analysis on today's geopolitical, financial, and social risks. Just visit riskhedge.com today to become a Risk Hedge insider.